Well, good afternoon, everyone. It's 10 past 1 here on Friday, the 26th of June. This video a little earlier than normal, and that's because I have a doctor's appointment this afternoon. And I won't be trading, well, at least until the second half of the American session. So, folks, what a difference a week makes. I think it was Harold Wilson who said in my youth that a week's a long time in politics, but a week has been a long time in markets. This time last week, we were reeling from the after effects of the FOMC meeting, where they said they were talking about putting up rates in 2023. I personally thought that the statement wasn't all that hawkish. But I couldn't argue with the market, and the market went strongly down, as we all know. That seems to have righted itself over the last day or two, and as I mentioned on Monday or Tuesday, a lot of money moving into tech stocks during the course of the week. So as we go into the trading day on Friday, we have in VectorVest parlance 3 green lights, where the price of the VectorVest composite is up day over day and week over week. The momentum, or the RT, of the VectorVest composite is up day over day and week over week. And the breadth of the market, as defined by the buy-sell ratio, is up day over day and week over week. A very strong situation. The short-term trend is up, underlying trend is up, and we've got a confirmed up in place. And as you can see, the pointer here says VectorVest advocates buying safe undervalued stocks that are rising in price at this time. I've bought into a couple of positions since I've spoken last, and we can look at those quickly and then move to the UK market. Well, apps has gone well. I'm very proud of apps. I spoke about that in the last video, and I've been holding that now for 2 or 3 weeks. I bought into Tesla, and Tesla has gone well. This is my first ever investment in Tesla, and precipitated by our user group leader out in Oxford, who's an enthusiastic Tesla supporter. Steve, if I don't make money on this, it's all your fault. Bought into this, folks, simply on a breakout of that level. All right, and that's about 635 or something. As I pointed out a couple of weeks ago, there's a very strong fib on the weekly chart down around here, and it broke out of this little triangle, and my initial stop loss, it's still on there, was at this level, and I've made as much as I've risked, and I brought my stop loss up to entry. I think that's about 635 from memory, and we'll see how it goes. I think it's going to pull back and fill that this afternoon. I think there's plenty of time in this move, and I think you'll probably get a much better entry going forward. I've taken a little bit. I made a little bit of money in that position already. Easing out of the position, or scaling out of the position, has worked well over the last few months, where the moves in fact haven't followed through. In 2020, where the moves definitely did follow through, you actually made more money by holding the full position and adding to a position, but you only know that after the fact. So for the moment, I've got my stop loss to entry, and I've taken a little bit, so there's a little bit of money in the bank, which is always good at this time of the year, where it tends to be quite listless. Zoom is also going my way. I bought into Growth Generation, and done really well in this stock over the years. Again, there's a fib level right here, and it's very similar chart, folks, and I'm not nearly as well into the money in that one. Just bought here, was going really well, and it pulled back into the close, so probably a bit of pain to go as it comes back and tests that trend line. So look for an entry there, or maybe wait for the VectorVest buy recommendation to come on. And the last one that I've just bought into is Palantir, which is a share that I've done really well in this bit. Okay, got that bit right up into there, and then had a losing trade just here. I bought into it just at that 61% retracement. It went up. I can't remember whether I got my stop loss to entry or not, but nevertheless was stopped out of it here, and then it went right back to that 78. I was sleeping, should have been into it there, but just bought into it the other day when the market started to move up quite nicely. And I think that even if you miss the 78% retracement, folks, if you see a market coming off the 78 with this type of huge move right down to the 78 and then closes on a high, then that's a sure sign that there's smart money working, and that if you get in after that, getting in above that would have been a great place, although the market wasn't saying yes there. I've got in a little bit late. There might be a bit of pain to go through in this, but this looks to me as if it can be a huge move. So we shall see. We shall see. As I keep saying, when you get into a position, folks, you're no longer an analyst, you're a risk manager. So manage the risk well. Until this market shows its hand, then I'm in fact scaling out, and scaling out invariably suits the type of market that we get in the summer. Okay, and I would expect, anything can happen, but I would expect the market to be listless until we get this Fed powwow over in Jackson Hole. That's in the last week of August. We shall see. Every year is different, but the seasonality, the summer markets invariably happen in July and August. So let's hop across the pond and go to the UK. Well, the UK market was much stronger, folks, and we had 4 days of down, and as you can see that the underlying trend remained up. We've had a confirmed up in place way back since last November, and in the US the market has been much harder going since last November. So we've got one green light. That means the price of the compass is up day over day and week over week, and the color guard is mildly bullish. I really haven't done anything in the UK, but I'm very pleased with Lion Trust. I added to Lion Trust a couple of weeks ago, and the results came out the other day. We shouldn't really be that surprised about the results. Were magnificent. We shouldn't be that surprised about the results because on VectorVest it's significantly undervalued, and the RV and the RS are really marvelous numbers. So VectorVest called that perfectly, as it does most high RS stocks, and that's why if you focus on shares with a relative safety above 1.3, there are rarely many mishaps. Every now and then you're going to get one. Avon Rubber is one that comes to mind over the last year, where they dropped the ball, some form of technical problems with their gas mask to the American military. High RS doesn't remove risk, but it minimizes risk, and certainly Lion Trust hasn't let us down. Sylvania hasn't let us down. Starting to get quite excited about Pershing Square. Games Workshop, it's going to take a while to get through those highs, and CCC is going well. Talia Mining and we're going to look at commodities in a second. Is inflation transitory, temporary, or is it going to be a part of the system? There's an awful lot of very smart money who says that it's not transitory. The Fed says it is, but Paul Tudor Jones, and if you dig through YouTube, you should be able to get Paul Tudor Jones's interview of last Tuesday or Wednesday, where he said that inflation is here to stay for a while, and that the commodity trade should be pushed. Now, Paul Tudor Jones is no lightweight. JD Sports is still above 9. Now, Kainos, this is an interesting one because I sweated in this, and I know that many of you sweated in this for a day or two. The numbers here could not have been better. As you can see, it's gone into a bit of a lull here, be calmed, and again we see this 78% retracement and I've told you all that it's become more common in markets. And as you can see, of this last pullback, we got a 78% retracement, and it went up in reasonable volume here, and I was quite excited that it was going to move, but then the market went into that lull again, and it came back to the 78, and in fact intraday went down below the 78. That's why I don't put stops in shares that I own in the system. There's just too much of this going on by exceptionally well-suited chaps in the city, or maybe working for their dining room table these days, but nevertheless bid right down here under the 78, and anybody who had a stop in there is gone, and now it's starting to move up quite promptly after all the smart money has been filled. As you can see, VectorVest has upgraded earnings per share by 10% over the last few weeks. So pressure's off a little bit there, folks. That's starting to look very good to me. This double bottom, which has lasted over a month, so pressure's off on Kainos. I like the look of it. In fact, Cranswick is still nearly hanging on to that £40 level. Persimmons and Bellway, a little bit of knock, but still fine. My entry into Persimmons wasn't great. My entry into Bellway was really good, well in the money in Bellway, flat in Persimmons, but I've taken a 5.5% dividend yield. GB Group looks good. Polymetal, we'll look at gold in a second. Gold's still hanging on to that 62% level, so reasonably happy with those. Now in the commodity portfolio, let's have a look at BlackRock World Minerals. It's not in the portfolio I manage on a Monday afternoon. It's in the long-term portfolio that I have for my two boys, and again, this has come back. Talia Manning's done exactly the same thing, but this has come back to that 78% retracement. Again, there's resistance here. Just remember, folks, that resistance and support are not defined numbers. They are sort of a band, and it came back to that. As you can see, two pretty good dojis in there. You see the tails in the candle here at that 78. That's smart money buying in there. I know that quite a few of our VectorVest regulars have bought into it under the £6 level. Well done to those of you that have done that. This has come back in a wave A, a wave B, and a wave C. I could put the stochastic on. It's vastly oversold. There's reverse divergence in the stochastic. I haven't added to the position yet, but I think I will on Monday morning. So I'll report on that next Monday afternoon at our Q&A session. So that looks quite good to me. And another stock that's in oil that I also own in that long-term portfolio for the boys is Royal Dutch Shell. And these are two positions that I'm hoping will take very little management, that I bought into at the lows of the cycle, and I can just hold them, or at least the trust can just hold them for a very long time. There are many other smaller oil companies that have done much better, and I know one of our subscribers, Paul Molina, again from our Oxford and Birmingham groups, has in fact bought into lots and lots of those, and he's sitting quite pretty there. As you can see, Royal Dutch Shell had this dalliance with the 78% retracement once more, and is now moving up. I think I bought into it somewhere around here, so I'm hoping that this is the low of a cycle that's going to be in place for a very long time. The oil shares haven't kept up with the oil price at all. It's as if people have got such a knock out of oil stocks over the last while. At the start of the year, they don't want to go back into them again, and clearly they are not that topical at the moment, where many funds are trying to get as far away from fossil as they can. Nevertheless, if this can be repeated, it can take us well above that 15 level. If we go to the chart, as you can see, that 15 level has been a huge problem before. There's a lot of overhead resistance there. It's going to take a while to get through that. If it gets through that, it can get to 20 relatively quickly. If you are a momentum player, I think there's probably better oil plays than Royal Dutch Shell at Shell or BP at these levels. One last look at the Nasdaq. I wrote an essay, or not an essay, a video on the Nasdaq on Tuesday. I said the money was moving back into tech stocks. I think what can we expect in the short term? We can expect probably a little bit of a pullback to those highs. So if we have a look at the pre-market now, there's the pre-market. That's a 4-hour chart of the S&P 500, folks, and saying the market's going to open at 4272. That's the sell-off last Thursday and Friday. This is the move up from Monday that took me by surprise. I thought on Monday that we would have gone down, run the stops, and then reversed, but it just went straight up. And clearly the bulls in this market can't handle any more than a 2 to 3 day pullback, and away it goes again. So it's a very, very strong market indeed, folks. If my friend Larry Pesavadis was here, I think he would be remarking that this is what he calls 3 drives to a top, and he would be expecting a pullback here, which could quite easily happen as the Nasdaq pulls back to actually kiss that old top. The front page of VectorVest has got 3 green lights, and I'm quite happy to hold those positions. And I won't do anything today until Monday. The gold price, there's the gold price. That's 62% of that move, and starting to look reasonably healthy at 1786. If this level goes, folks, then the next level 1720, 1722. I'm hoping that this hope is not a strategy, I know, but nevertheless I'm hoping that that level will hold, and that my investments in Pan-African Resources and Polymetal are safe, at least for now. Seasonality is not great in gold. It normally pulls back in the summertime a little bit, but into July and August, but it seems to be holding okay for the moment. If you're not in gold stocks, do nothing. If you want a quiet life and just make some money easily without a great deal of sweat, then find shares like Lion Trust, okay, that are undervalued, that have got a huge RV, that have got an RS of greater than 1.3, with a reasonable CI and a good growth rate. There are like Sylvania, like Games Workshop, and there you can make money relatively easy without a great deal of sweat. So folks, 1:30 on Monday afternoon, VectorVest Q&A. Those of you that are members, you should get an invite for that. Those of you that are not a member, that would in fact like to come along, then email me, david.paul@vectorvest.com, and I'll send you off a complimentary invite. So steady as she goes, folks. Just remember, when it's time to sell, you won't want to, and we're going to have to sell at some stage, but for the moment, let's just enjoy the trend and sit. The money's made by the sitting, not by the thinking, said Mr. Livermore so many years ago. Have a great weekend, everyone. Bye bye.